Hello everyone, I hope you guys are having a wonderful day, making some really good trades, and yep, let's just get into it. I actually haven't done this in a long time, but usually I make my videos in one take, and this time I actually had to remake it because I got too heated in the first take. So yeah, let's get into it. But so far, you guys may know, you've seen this chart many times already. If you haven't already, you could probably look at some few past videos, and it explains a 50% correction coming for Bitcoin, in my opinion, as we enter the red money flow. Probably expecting a 50% drawdown in the price of Bitcoin, or maybe around April 4, but we're just got to see about that. That's still a lot of speculations, but you guys should know that Bitcoin corrections like this, and right now we've only fallen around 50% from the all-time high at $69,000. That is not a full correction yet. Full-on market corrections for Bitcoin from the top down is almost an 80 to 85% drawdown in the price. So right now we haven't even reached that yet. An 85% drawdown for the price of Bitcoin would come to, or let's just say 80%, flat 80% would bring us around to $13,000 to $14,000. So that, in my opinion, is pretty good, because it gets all the people who are trying to make a quick buck on Bitcoin out, and it keeps all the hodlers in. It's a great buying opportunity, and it also flushes out all the scam projects, all the pump coins, all the shit coins. It gets rid of all of that all in one go, and it makes all of those people lose money as well, because they all the scam projects don't deserve to make any money in the first place. But yeah, overall, Bitcoin market corrections are good for flushing out the price. And I had a great talk with Rick today, by the way. Rick is back in the Discord, so if you guys haven't really, definitely join the Discord. Rick is a great great analysis, and yeah, he's always got something to say. But anyways, let's get back into it. We can see that the FOMC meeting we had today is going to continue on tomorrow, and they're going to have an announcement regarding that. And the Fed's going to be raising rates at a quarter point basis every couple of months to slowly raise rates, because apparently our economy is extremely strong. But we're going to save that part for a little bit later. We're going to be talking about the rates right now and how they're priced in, and how the market hasn't taken something into consideration, is how that they haven't priced in inflation, right? You can price in rate hikes, because someone's going to tell you that the rates are going to be a quarter point, and that's guaranteed, and we're going to raise them on every other day. And now you can price into the market, so you can, that's why we saw that big drawdown tech stocks, and now they're starting to come back up a little bit, and they're trading sideways because they've already been priced in. But something that you can't price in is inflation, because so far the Fed's been telling us inflation expectations are anchored at 2%. And how is that going? We're now at 7.9% inflation. How are you going to tell people that your expectations are there to be 2% inflation, and all year long you were singing that story in 2021, and they were wrong the entire time, and inflation was well above 2%. And now that we entered 2022, they said, well, we expect inflation to come down to 2% now. And every month so far this year, we've had a rise in inflation higher than the previous numbers. So now we're at 7.9. What's it going to be next? Is it going to be 8.5, 8.9? Are we going to get to 10% before the Fed actually decides to do something about the dollar? Right? About the inflation. Right? So that's something that the markets haven't taken into consideration. And also a big correlation to the gold prices are with interest rates, is that rising rates are bad for gold, right? Isn't that the idea, right? If rates go up, then that's got to be bad for gold. It's bad for gold if real rates are positive, right? Right now you still have negative rates, right? Let's say inflation is at 7.9%, right? And you raise rates to 1%. Let's say you raise it to 1%. You're still losing 6.9% due to inflation. And that is bullish for gold. And that's what a lot of people don't realize, is that scenario is very bullish for gold. And right now, price is falling in anticipation for the Fed rate hike tomorrow. We still don't know what it's going to be, but 97% chance that it's going to be a quarter point rate hike. But what they're saying, what they're telling you is not the truth. It's that they can't fight inflation, right? Well, we'll just take a look at some quick numbers right here. We're gonna go on Google, take a look at some economic numbers. Okay, there are the numbers. Perfect. Now, a lot of people have been telling me that when we raised rates back in 2018, there was no market correction, right? We didn't crash right away. We were able to raise rates a little bit before actually anything happened, right? So back in 2018, we had a stronger economy. As you can tell right here, in 2018, we had higher unemployment rate. So more people had jobs than today. So when the Fed tells you that our economy has never been stronger, well, that's an all-out lie, because we have less jobs than we had in 2018, even saying 2020, right? And same thing for Joe Biden. When Joe Biden says we recovered so many jobs since our administration was in office, you're still missing a bunch of jobs that you had in 2020. So you're still in the red. Just saying that you're less in the red doesn't make you that you're making it sound like you're in the green here. It's not at all what it is. Moving on, we could take a look at the United States Michigan Consumer Sentiment Index as an all-time low. This is the 10-year mark, right? You can see maybe in the 25-year mark, we're at an all-time low as well. We're near recession now. And take a look at some other charts right here. United States inflation, like I said many times before, 7.9, and next month they're expecting 8.2%, right? Again, we're gonna blow that number out of the water, in my opinion, since the oil we're not even taking into account what just happened in Ukraine. It hasn't been priced in yet, so we're gonna see what happens when we get that. And right here, the United States Fed fund rate, when they started to raise rates in 2018 by a substantial amount, and they got to 2.5%. Well, you know what? Little did they know, when they put it at 2.5% in near October, that was the last rate hike they were gonna do before they reversed, right? They raised rates and they were trying to reduce the balance sheet, and guess what happened to the stock market? Just in 2018, right? We started to raise rates and it didn't start to go our way, and the stock market started to go down, and we saw a 50% drawdown in the market. Sorry, not 50, around a 20% drawdown in the market. And you know what? Right after that, the Fed did a 180. They started lowering rates, right? And we started printing money again and increasing the balance sheet. You guys can take a look right here. Right in 2018, when we started to lower rates, we're reducing the balance sheet size. And when shit hit the fan, well, you know what? We started printing money again. We started getting back on the horse and just started, printing our way out of trouble again. And in 2020, things really got out of hand, and I've never seen anything like it, when the Fed's balance sheet grew by so much, and we're still growing today, and they said they're going to start reducing now, right? When we have a weaker economy, we have more debt than ever, right? And now the low rates are near zero, and they're saying if we go into a recession, right, you think they're going to be able to lower rates from zero? Of course not, right? We're going to be in a stagflationary environment, and that's terrible for the market as a whole. You want to hold value stocks and stuff like that during that kind of a period, but this is going to be probably one of the worst market crashes in history. So it's just quite sad to see that the government's probably going to blame this on Russia or something, but they're not. I can guarantee you right now that they're not going to take the blame for this. They're going to put it on someone else. Anyways, moving on. I think that's about it, actually. Oh yeah, you could take a look. You could, just so I'm not biased, I could also look at some positives. Unemployment rate has come down significantly. We're almost at the 2018 levels as well, but again, there's much more bearish factors for my calls right now than there are bullish, and that's why I'm expecting a 50% drawdown in Bitcoin and a 50% drawdown in the market as well. But you guys can make your opinion. Hopefully you guys are able to watch this video. I know it's not your regular informative video, but price action has not been too crazy lately for Bitcoin, and right now I think it's a good time to talk about this, since I haven't had the time to talk about it yet. You guys have been awesome. Love you guys. I'll talk to you guys later. Peace. If you haven't already, guys, definitely join the Discord. It's only $10 a month right now. Also, thank you for 8,500 subscribers. And if you haven't already, definitely sign up for Big Get Trading. That's our sponsors for today. Peace.